What is going on, investors? Back again. We are recording this in the morning, so trading is going on right now. We're going to talk about Plug Power, ticker symbol Plug. I reviewed this company a few months ago, and I absolutely eviscerated it, and partly because a lot of the talk out there was very bullish. And in fact, the stock has performed absolutely phenomenally over the last few months. We've got an $8.3 billion market cap. The stock is soaring today after earnings. We'll jump into the numbers. I really think it's this guidance that's really pumping this stock up nicely as well. We'll jump into the numbers. We'll take a look at them. We'll see if they're any good or not. And then finally, look, we're up on huge volume today. That's a bullish sign as well. So let's just jump right into it. So they announced their earnings beat, earnings per share, and all that stuff. When we get into the numbers, I'll show you the operating income, the operating loss, things like that, revenue and margins. But I think it's really this guidance. Take a look. In full year 2021, we're looking at $450 million. They upped their guidance this year to $325 to $330. That was up from $410. So they're projecting another, we'll call it $120 million onto the top line next year. Now they give full year 2024 guidance. This is really good clarity. So I got to give Plug Power and their management credit here. They're giving you really good visibility into the business because they say in 2024, we're going to have gross billings of $1.2 billion with a B and operating income of $200 million. And so at an $8 billion market cap, I guess you can start backing up your valuation into that. So you're about 8 times sales on the gross billings. And then on the market cap, I guess you're still at a pretty hefty price to earnings, at least from an operating income basis. You're still pretty hefty when you're talking about an $8 billion valuation. So that's just something that you want to think in mind. If this is what they're guiding for full year 2024, maybe it's low, maybe it's high, but that's just something you want to factor in as we move forward and closer to that date. So let's jump right into it. Consolidated statement of operations. So we got 3 months ended here, 19 over 20, and then we got 9 months here, 19 over 20 as well. They've got a lot of stuff going on here. So we've got sales of our fuel system here. This is their primary business. It went from 38 million up to 83. That's just phenomenal growth. You see for the 9 month, that type of growth is holding true as well. They basically doubled their business at the top. So that's really nice. So we have these services here. That is just really steady. It looks like year over year. We've got these purchase power agreements. And so it was relatively steady for the 9 months and the 3 months as well. And then we got fuel delivered to customers. That ticked up a little bit here, both in the 9 month and the 3 months. So let's take a look. So we've got our total net revenue here came in at, we'll call that $107 million. That's up phenomenally over $60 million in the previous period. And you see for the 9 month, it holds true because we had about 139 and we're up to 215. So really, really solid growth on the top line. Let's take a look at our cost of revenue. So our sales of fuel systems, we pay 68 to make 83. Not a high margin business, but high enough, especially with the revenue growth that they're achieving. These margins, not necessarily what I would call high, but if you can keep achieving this type of revenue growth, then those certainly are going to be margins that will squeeze out some profits one day. Services, they lose a little money there. They spend 7 to make 6.8 on the provisions for loss of contract related to service. I don't see that necessarily up here, but they add that into the cost. We've got our purchase power agreements that cost 14 to make 6.7, and then we've got fuel delivered to customers. We spent 14 to make 9.8, so we lose money there. So still, from a financial perspective, we spent $108 million to make $106 million. If your kids had a bake sale out front and they spent $108 on the cookies and they brought in 106, I think you'd have to explain to them that their business is not looking too good. Although again, Plug Power is about growth and it's about the future and it's about future revenue. But from a 3 month standpoint, this is not that great. So from a total cost of revenue on the 9 month, we spent 216 to make 215. So we're basically at break even, which might not be a bad thing. But unfortunately, in the previous year, we actually made 15 million. So it is going in the wrong direction. And for the last 3 months as well, it's going in the wrong direction because we made 8.3 million and now we lost 1.3 million. It looks like our losses are actually accelerating here since the 9 months are only at 685. Now, unfortunately, that's not our only expenses. We've got other operating expenses. Research and development went from 8 to 12, and then selling general administrative went from 10.4 up to 14.3 million. That gives us total operating expenses down here at $26 million. That's $8 million over the previous period. So our operating loss is at $27 million. That's nearly 3 times the net loss of the previous period at $10 million. And we basically doubled our net loss over the last 9-month period. So now let's take a look at this guidance again. So for the full year guidance of 2024, they're not guiding to operating profit in 21. They're doing it 4 years later at a $200 million. So they're saying this is going to turn around at some point, but 4 years is a long time and you're going to build up a substantial amount of losses on the balance sheet. Now, how are they financing these losses? Take a look. So this is the previous 3 months here. We had 236 million outstanding shares. Now we have boom, 371 million outstanding shares. You see for the 9 months too, we're up about 100 million shares, over 100 million shares. We had 229. Now we have 330 million shares. That is dilution at its finest. Let's take a look at the balance sheet. Let's see how well capitalized. Can they survive these types of losses? From the cash perspective, they got 500 million, 480 million. Again, we lost a grand total in the last 9 months. We'll just come down here to net loss at 85 million. When we jump into cash flows, we'll see how bad the cash flows are. Maybe it's some stock-based compensation mixed in there, but we'll just keep in mind we've got about 500 million in cash because we've got some restricted cash here. We've got some receivables as well. Total current assets, we'll reduce this inventory a little bit. We'll just say they got about $600 million worth of total assets. That's pretty solid, but come down here to the liabilities. They do have some long-term debt here sitting at 120. That's up from 85 in the previous period. So, and we've got a current portion of long-term debt. Take a look at this. Current portion of long-term debt actually has tripled. It went from 26 up to 75. So there's going to be a significant amount of this cash rolling off the balance sheet unless they do more fundraising. So let's come down to the cash flow statements. So here's our cash flows. 9 months ended 19 over 20. We pulled down this net income number. It was 67 negative in the previous period. Now it's negative by 85. We can add back in some things. Stock-based compensation is not a big expense on this one. Neither is depreciation. These aren't huge numbers. And so, yeah, we've got a big negative cash flow. So we got negative cash flows of 156 million. And so when you factor in that they have $500 million in cash, 9 months ended here. So in 9 months, we're burning through 150 million. That's about 50 million a quarter. You can maybe bolt on another 50 million and you're burned through about half your cash on the balance sheet in 1 year. And so if we're not projecting a profit until 2024, it could be problematic from a cash perspective. Let's take a look at the financing activities, see where a lot of this cash is coming from. We see proceeds from public offerings. So we generated 344 million in the previous 9 months. And then we've also proceeds from these convertible notes as well. They got about 200 million from there. And so they repurchased some. So net, it's a little bit different. They issued some long-term debt here. So that's pretty nice. They've repaid a little bit of debt. They've done some other payments. So net cash provided by financing activities, we raised about $600 million. So that, more than offsets the cash burn from the business. And then even when you add in the investing activities, this is about, we'll call that about $240 million. And so you had way more than that from the financing activities, but you actually have to anticipate this is likely going to continue over the next 2 or 3 years with Plug Power. So I think that's going to be a little bit of a push-pull. When we take a look at the stock chart, the stock has had monster rallies and then consolidated sideways and down, monster rally, sideways rally, monster rally, downward rally. and we're in a monster rally right near. So if you want to go long Plug Power, I'd wait for one of these sideways consolidations or downward consolidations. Wouldn't surprise me if this stock pulled back into the, well, this, 19, only $1 under where we are. If you're really long this story, it's, this is actually a pretty nice kind of channel that we're developing here with this stock as well. So we've got kind of this long-term just upward channel with this stock. And I honestly don't necessarily see this ending anytime soon. If this stock were to pull down to the bottom of this channel, which right now, I mean, it'd have to do it very quickly. It's probably $15 to $17. To me, that wouldn't be a bad spot if you're trying to get in here. And you've got to believe in the long-term story. You also have to understand that you're going to be diluted extraordinarily amounts of shareholders. So just think of it as like the United States dollar. Okay, 50 years ago, a quarter could have bought you maybe a candy bar and maybe a soda, and now a quarter gets you basically nothing. And so you just got to hope that this company can manage this type of dilution. This is very, very, very rapid dilution. So when you have this type of rapid dilution, the story has to stay on track and investors have to stay interested in the company. And I've seen it with 3D printing companies, with 420 companies, with lots of companies that are the flavor of the week. And then all of a sudden, a year or two goes by and investors kind of fall out of interest in the story. So you just got to hope that management keeps the story going, keeps this guidance in, front of investors and says, hey, look, we're going to make money. I know we've got to finance this through fundraising and share issuance. Those are the things you just want to think about. Personally, not a stock I typically would want to be interested in. If I was interested in a stock like this, it would be a pure speculation play. Not saying that this stock can't go up even further, but again, we're already at an $8 billion valuation, and if you give them credit for 2024, we're at about 8 times sales, and we're about 40 times operating income. Again, this is operating income, not necessarily net income. Remember, when you come to the balance sheet, you've got operating income here, but that doesn't factor in some other expenses that they might have, maybe higher taxes, who knows? Well, then you come down to a net loss, and it's typically a little bit larger, especially when you factor in taxes. So that, not necessarily the cleanest valuation, even at today's prices. And if this stock continues to trend up, the valuation is going to get richer and richer, and they are certainly going to have to deliver on this guidance. But look, they did it this year in 2020. They had guidance at 310. Now they're at 330. And then next year they're guiding to 450. Maybe they can get it up to 500. And then maybe they can spin an operating profit before that, then yes, this stock would likely continue to head higher. So that's Plug Power for you. Absolutely phenomenal quarter, phenomenal day in the stock market. This stock is absolutely soaring. If you've been in this one, it looks pretty good to me from a chart perspective too. This chart looks pretty nice, and it looks like it's just kind of traversing upwards, and maybe you can catch it on the upside. So that's Plug Power, ticker symbol PLUG. We'll be back again later today with more videos. Good luck with your investments.